Welcome back. Markets this morning are higher. Take a look at futures indicating a gain on this holiday shortened trading week. The Dow is up 62. The S&P is up 6 and the Nasdaq higher by 37. All three major indices finished higher yesterday. In fact, the Dow Industrials today begins in uncharted territory after closing above 52,000 for the first time ever yesterday. The Nasdaq, meanwhile, snapped a 5-day losing streak after last week's chip sell-off cooled off. Shares of Alphabet led the charge in its first day trading as a Dow stock. The stock was up better than 4% yesterday, and it is continuing the climb today. As you can see, up a fraction. Joining me now is Portfolio Wealth Advisors and Chief Investment Officer Lee Munson. Lee, great to see you. Thanks so much for being here. What's your take on tech in the spotlight, obviously, and having sold off a bit, but back on top right now?
Well, I think it's a big catch-up rally right now, especially with the mega caps. You've seen all the, we've heard all the stats about, the Mag 7's down for the year, whatnot. The thing that I really like is looking at the bargain basement. A couple of years ago, I had a lot of success being long Google and Amazon with his Left for Dead. Right now, it's all about Microsoft. I've never been a big fan of being long Microsoft, but right now I would be. It's down over 20% this year. And really, if AI is going to work, Microsoft's going to be that poster child to prove to the street that we can get a return on invested capital for all the hyper-scaling costs. So I think if you're looking for something with a reasonable value and you want to look at that large tech trade, you're going to look at your Microsoft, you're going to look at your Amazon. I'm still long Google, and I love it.
Yeah, Ryan Payne is with me this morning, who's been owning all these stocks for a long time and have talked about this bull run continuing. Ryan, how do you see this trade now?
Well, I think you have an interesting point here, because if you look at the Mag 7, it's down like 3% for the year. But you take the Mag 7 out of the S&P 500, it's up 14%. Like, that's a huge spread. So I think the big question here is, do you see a re-rotation back into those tech stocks, in the Magnificent Seven? I would say here, a lot of questions around spending right now. We look at the hyperscalers this year. The amount they're going to spend is just enormous. It's really starting to cut into their profits. So I would stay broader. I do think you get a re-rotation back into those stocks, but the economy is broadening. You look at small caps and mid caps. Forward earnings are at an all-time record high. So this economy is really broadening out, and so is the stock market. I would keep the money spread out. Don't over-concentrate into that Magnificent Seven trade.
All right, broaden it out. Do you agree with that? What do you think about this broadening out, Lee?
Well, I've got so much in small cap value and large value, and I've just been killing it ever since last October. So I really can't argue with that. I think that what, investors need to sort of look past right now, you look at something like Micron, which is really about the earnings bubble in AI right now, and you have to start thinking we're going to go, into 2027. It's not going to be pickaxe and shovels with Micron and NVIDIA. It's going to be all about productivity gains and seeing in the EPS. That's why when you look at just any little ratty small cap value index, all the forward earnings are through the roof. So I've always been long value, but I'm very long right now, and I think you got to barbell it with that bargain basement cheap stuff, and then you go up to the mega caps, like I said, the things like the Microsoft, the Googles, the Amazon, and I think that you'll have a nice portfolio and not have to worry about every day, is Micron going to beat their earnings next quarter?
Yeah, a great point on the near term and short termism. Meanwhile, Meta has a new research partnership with Ramp, showing small businesses utilizing AI are actually growing headcounts, increasing by 10%, 12% on entry-level hires, and companies who've adopted the advancing tech of AI are seeing more engineering capabilities and are likely to receive venture capital backed funding as well. Meta President Dina Powell-McCormick said this, quote, small businesses are the backbone of the American economy, and AI is helping business owners save time, focus on their customers, and ultimately hire more employees. I mean, shares of Meta this morning are trading this way, but this completely goes against this fear about AI destroying jobs. In fact, it's the opposite, according to what Meta is saying this morning. Your thoughts?
I would say that I'm not really concerned about job losses. We don't have a lot of job growth. We don't have enough labor right now to go around. I think that tech is inherently disinflationary. And as a small business owner, if I can make everybody who I hire, twice as productive as before, that's money in my pocket. So what I think that we're really going to see is, first of all, you're going to see business owners notice. And I think everybody who owns a small to mid-sized business is seeing AI in everything. It's not just ChatGPT writing the email. It's our workflows. It's how to merge multiple databases. Heck, it's just in your marketing. The costs have gone way down. So, from a business owner perspective, the cost of conducting business is starting to get crushed. AI is just not an expensive thing to bolt on to your day-to-day workflow. So I totally agree. That's where, and again, you're seeing that in the smaller companies, and you're seeing that in forward earnings, even in smaller publicly traded companies. And I think that when we start looking at job reports, I think perversely, you're going to see more hiring, and I think that's going to make it harder for the Fed to cut before you get that real deflationary effect that we'll see that every big technology brings.
Yeah, what about that deflationary effect in oil? I mean, oil prices this morning are back above $71 a barrel, but we've been watching oil prices plummet, just as President Trump expected. And the U.S. and Iran are set to meet for high-level talks in Doha today. Both sides agreeing to stop strikes after a weekend of crossfire. Crude oil now up about 1/3%, and the president is calling on oil retailers to drop the price of gas, posting on Truth Social, quote, gasoline retailers must get their prices down immediately. They're too high considering that oil is now at $68 a barrel and heading south. The retailers must quickly react to this statement and do what they know is right. Drop your price for our great American people. Start targeting around $2.50 a gallon number. Today's national average, Lee, is $3.84 a gallon, but that's down from $4.35 a month ago. What's your expectation for oil?
Going lower. Maria, I'm structurally short oil with my 30-year Treasury position. I think that even though I know the president wants to see it cheap at the pump, when I look at West Texas Intermediate sweet crude right there, I see it going down the 60s. I could see it going back to the one-year low around 55 a barrel without a lot of sweat. So I think in positioning your portfolio, certainly, could we see something hot in the Middle East one more time? Sure. Could we see oil spike or yield spike a little bit more? I'd love that to get a few more of my positions organized. But at the end of the day, I think going into the fall, going into next year, structurally, oil is going down. That means structurally inflation is going down. That's great for yields. That's great for long duration assets like tech. And I think along with AI productivity, we're going to have a good market going into the end of the year and through 2027.
All right. Nice prediction as we kick off the second half of 2026. Lee, good to see you this morning. Thank you. Lee Munson joining us.
Thank you.
Quick break and then